Hey, it's Mack with PriceActionTradingSystem.com, and it is Friday. It's February the 6th. It's been another interesting trading week. This afternoon was really interesting. There was some big news around 7:30 this morning, but it didn't really affect the market in a big way or anything. The better sell-off was this afternoon. I believe there's a two-tier downward sloping channel here. Uh, we kind of overshot it down here to the low side. But on a sell-off that strong, that's not completely, something that you wouldn't expect to see happen. But you can see this midline is affecting it here. The upper line held real well. So I believe it's probably valid. It's close enough it would have been worth trading because you shouldn't have been trading. You notice I didn't mark anything after about 1:30. If you caught this trade, great. Um, but that really started about 1:30 and led you right into um, right into the last hour or so of trading. And we took a little bit of that. We took about half of that back before the market closed. So it was interesting. I actually came in before the market closed and watched some of this, and it was really, really tempting to want to buy that. And I almost did, but needless to say, I didn't. I know better, especially on a Friday. Next thing you know, you get back your entire week's trading. So, but it took a little intestinal fortitude. You've heard me use those words before. It took a little bit to say no, not to buy, but I didn't buy. I just sat here and kind of watched it and said, okay, what if I bought here or whatever, and just see what it do. But uh, anyway, let's talk about the trade. Okay, I backed out just a little bit here so you could see the two tiers down. Um, it was two legs up, and it really was two legs down. I would say the downtrend started right about there. And if you measure that, what do you know? And if you measure the whole thing, I think it's almost a perfect. Let's just measure the whole thing. I mean, that's really the entire down move. So that would be your secondary measurement. And that gets you still pretty close. We still overshot that a little bit. But usually what I'll do is I'll measure it a couple of different ways. But the downtrend really didn't start till right there, I would say. And I would measure your next leg from right there and get you pretty close to the same place, maybe a few ticks further, measuring it the other way. And notice how that gets you right to the bottom trend line as well. And that's usually a good indication that your channel might be right if this stuff matches up, that kind of thing. So something else to think about there. So anyway, and if you measure the one from the upside, from the bottom up, there was your first leg, and then the correction started right there. And you see, we missed that one by, we kind of undershot that one, and we kind of overshot that one. So, uh, but easy targets. I wasn't sure if we were going to get there from here. It looked like we might end up in another range here, but we did break higher and tried to go up further. We actually have a channel working up here. We got the break, and then we tried multiple times for a retest, and the market finally gave up. And you see what happens. Boom. Man, what a sell off. And then it corrected a little bit, and boom, sold off again. So, um, interesting day, to say the least, but still quite a few trades. There's a few greens in there. There's a few of them that I marked green. I'll explain those. But let's back out and look at the chart, and we'll talk about what we saw. Okay, the first trade, when I came in, we were working up. We did have a break here, but a lot of times you'll get a break early on in the overnight, and it doesn't necessarily change anything. So you got to watch it. You still have to kind of still play the channel if you get a trap or a setup. So we had a break here, a big push to a new high. This was right around news time. It pulls back, first entry, pulls back again, second entry. You might have thought about just watching this one go by, but it was because it was news time. But you know, it really follows the price action. It really wasn't moving it's so fast that you couldn't keep up with it. You can see that bar ended about, a couple of these bars were pretty quick, 7:31:24. So that one was a minute and something, and then that one was about 45 seconds. 33, about 40 seconds. And then this one was about a minute. And by the time you entered, that one ended at 34:54. Well, this one didn't end till, um, another minute later. So you had time, and you could have used a limit order on this one when it broke higher. So this one wasn't moving as fast as a lot of news items did. I really thought the non-farms, a lot of times it can be pretty volatile. So the first move obviously moved pretty quick. It didn't take very long for it to move. But by the time you got this second entry long here, it wasn't moving that fast. It wasn't moving as fast. I shouldn't say it wasn't moving that fast because it was moving faster than normal. But look at that big pullback, first entry, pullback, and there's a second entry long. And if you measure these two legs, they're close. The second entry may not be quite, or the second leg is not quite there. Misses it by a tick or so. You can see that. Maybe misses it by a tick. So it was a good trade, and it didn't take but a few minutes, and pretty good move. And then it starts selling off. It doesn't really give you a chance to get in until there's a first entry, pull back, and there's a second entry long there. But look how bearish that signal bar is. You can't go long that there. So just sit tight, see what happens, and guess what? You get a trap, and boom, it takes off. So you definitely, and that's what happens with news items a lot of times. The news item comes and it you get these big moves, and then quickly it takes it all back and then resets. And look, it came all the way back down into where it started, and it resets again. And that's fairly common. And notice that we had a break in two legs to a new high here, but notice this low, and then it creates a double bottom, and you get that little trap. It was tempting to go long there, but I think you got to wait on a second entry, which pulls back, and it gives it to you here. And notice this one coming down, you got a break in a couple legs, and that's what a little reversal pattern looks like. I generally like a better signal bar than that, and that's not a great signal bar. I marked this one in green. It would have been a good trade. And then it sells off again. There is a second entry short up here. I don't see you wanting to take that trade. I really don't. But once if you somehow got in that trade, which I don't see how you can safely, it's not a very good setup. It's questionable if there's any break of this channel working up. I just don't see a safe way. Obviously, once it started going, you want to be thinking possible measure leg, but we don't get anywhere near that. Well, I shouldn't say that. We get close, but we don't quite get back to where the market opened, and that was right here. That was where the market opened. And a lot of times you'll test that area on both sides, depending on which way prices are going. But this gets tested a lot of times during the day, and you can see it tested it several times during the overnight. And we tried, but it bounces there. You've got all the support across here. This is a failed break lower. It is a first entry, but notice we got the break, and we got a for sure break and move to a new low, and it bounces. I like that one simply because this was looking like a possible range, and there was, regardless, there's strong support there. It's way away from the EMA. It's probably going back to the EMA at a minimum. Then you get a first entry short, a pull back, a second entry short. Not a very good setup again. So, I think you just skip that. And even though this would have been a good scalp if you did take it, where does it bounce? Right here at this same level. And look at that bar. And that's a big bar. Just go long right above that bar. Don't, when you get a reversal like that, a strong support, you could consider using a limit order, and you might get filled, but I usually don't play around with those setups. This is looking too much like a range at a very minimum, and you had this leg up, and now you got two legs down, and you made a higher low. You got strong support. Um, I like that for a long. And guess what? Any runner would have survived this. And you put your measured move up here. You measure it and get your measured move. If you want to try to catch as much of it as you can, and put your exit order a few ticks in front of that in case you don't make it, and and let it ride if you want, at least until you get a break of the channel here. When you got an overshoot here, this is where I'd be looking to exit, and I'd probably add on. I'll just be honest with you. I usually exit when we get to the other side of the channel, and then I look for a new entry. And notice this setup. You overshot it here, so a lot of times that will lead to an overshoot on the other side and your possible reversal. But that didn't happen this time. It bounces right off. There's actually there's a new high pullback, first entry pullback. There's a second entry, but there's too much overlap. And look at all those matching lows. It's just another little matching, a bunch of matching lows across there. And you get that little trap that falls down. It bounces right off the EMA. Now you got to notice, notice you're coming up. You pull back. You got a first entry short pullback. It's a failed second entry short there, and this one ticked a little lower, and this one bounces right off the trend line. So if you didn't enter here, you might consider entering here. The only reason I made this one green is because it's right into the resistance. Although you figure with no break of that trend line, and having already touched that, we're probably going to go through it, but you got to be careful. So you got to think about that one a little bit. That's one you might use a limit order. I think you would have got filled a few ticks back into that bar. But this is the one I really like, and you might have even thought about adding on here. When it pulled back right here and then went higher, you could almost even enter there, but it's so close back to this side, and uh, that I was afraid it might tick up right there and touch, but it doesn't. It just keeps kind of pushing higher, and I don't see any other entries after that. Now you got to wait on it to give you a trap or come back, and you do get a new high pullback first entry, and you pull all the way back, and you get a second entry long here, but you're already below the EMA. It is your first break, but I think you got to wait on the second entry, uh, counting off the low, and so you pull back. You get a second entry right here, but look how bearish that bar is. You can't be going long above that. And this one kind of hesitates, so now I'm thinking, hey, we're probably got some more down move. Just wait, see what happens. And guess what? You get a failed second entry short right there, reverses and goes the other way. If you just take that when it goes out the other side with a stop, that was a quick, easy scalp. You didn't get anything more than that, but that's that little trap, once again, that we talked about yesterday. This one looks very similar right here. Even though the middle one went lower, it's still very similar to that. Notice it right here too. You got the matching lows, a little tick lower, um, just like right here. So it's kind of that pattern again. And whenever you see those are generally, especially if it's taking you with the current trend or whatever, it's trapping you to the wrong side or whatever. And then And notice how rangy, look how flat the EMA is there. Now you got a little failed break lower below a triple bottom. It is a bigger bar, but the odds are you're probably going to test this and maybe even make the new high that we're looking for. Uh, but this turns out to be a pretty good trade, and then it pulls back and it gives you a second entry right there. And obviously it doesn't go any higher. It turns out there's a trend line right there, um, which you wouldn't have probably had at that point. So um, the only way you might have found it was if you drew, you wouldn't have known the angle even to draw it on here. So no, there's no way you'd have had that, even if, I didn't have it then. So I was just playing this as the shorter term trends and a possible range still at that point. And then once it bounces there, you get a first entry, pull back, and then a second entry. And look at all those dojis stacked up. Everything's still straight. This is looking like a trading range now. And I actually had this right here. So you don't want to go long right there. Um, I mean, short right there. We still don't have the new high yet. Um, so you got to be careful about that one. Once it went a little bit higher there, I actually kind of moved this up to those closes right there. and it bounces right off of it. And really all that happened is this line just moves up a little bit. There's probably a midline in there. You still got to be aware of this line down here. So, but then when it turns down, look how bearish that bar is. You figure that's going to give you a ride to right here at a very minimum. And the main thing is this really confirmed the trend line, but when it pushed a little higher right there, and then that bearish bar is what I liked. And you might have even thought about trying to use a limit order, although I think once it broke lower, it just fell real quick. But it does come back right here, so you might have gotten filled back here if you tried a limit order, and then the bottom falls out of it. That's the trade of the day. And the only reason I really like that one is the big bearish bar, because there's a lot of overlap there. And also, I take that back, the fact that it ticked one tick higher than those three matching right there, you know you got people trapped now. And off it goes. And plus we tested that line 1, 2, 3, 4 times or so. And then you get a pull back. There's 2 legs up. Look at this low, pull back. One first leg up, and you get a little pull back and a little lower high, and then a second leg up. And they're pretty much equal legs. This one may not be quite as long. This might be a tick or so smaller, but that's a good sign for the downside. But notice you get a first entry off the top, pull back. There's a second entry right there counting off that high, or second leg down. And so I like that. And this is a breakout pullback for this little trading range. Everything's pretty much been below the EMA. You're going to probably retest this at a minimum, and off it goes. And then you get a first entry long right there counting off this high. Notice that's the first break higher. And then I'm sure they trapped a lot of people thinking that, hey, it's over, the market's overdone. It ticks up, gives you a failed second entry long, and breaks below that bearish bar already. And look at that thing go. And then, of course, you're looking for another leg like that one. Or maybe from there. I would have measured it from both places. I would have measured it from here first and then down. And you see we went a little further than that. But I also would have measured it from there down. And we don't quite make that one. So, but anyway, that would have been what you would have been considering. And then notice this, you get your new low. Notice your break right here. You get your new low, pull back first entry, pull back second entry, right off the EMA, big bearish bar. Just go short right there. You do have a couple of lows there, but you don't have it confirmed yet. This is still pretty bearish. You don't have a measured move yet. But of course it bounces. And you might have even thought about going long right there. I think it's still a little bit early. So I let that one go, and I didn't mark it. And it kind of moves a little higher, and it pulls back. It gives 2 legs back and a second entry long there. This is one we've talked about. There's been a few comments on the videos. Look how big that bar is. Well, it may be too big to enter on a stop. So you've got a couple of options. One is let it tick higher and drop your limit order in, and you could have gotten filled all the way back to right there, and that gets you in without without breaking the 8 tick or 2-point rule, and with a lot less risk. And a lot of times you'll miss the trades doing that, but the fact that we broke the trend line, that's telling you something's. And there was a break here as well, but you weren't sure then if maybe you don't have a 2-tiered or something, and you might have still been thinking that here. But either way, there's a short trap. There's a second entry short that bounces, and that's off the and that's that special area we talked about, that yellow line. That was the overnight, or the open from yesterday afternoon, or the overnight open. It gets tested a lot, and but that's how you get in those trades. And if you miss it, you miss it by doing that, but at least you don't break the rules. And notice you could have gotten in all the way back to here and then not taken any more heat. And a quick move up, pull back, but I don't think you can go long there. There's too much resistance across there. it shoots higher and then sells off. And then there's a little pullback right there. So, if you're still trading, you really could have gone short right there. It's a first entry, but it's inside that trend line. It's off the EMA. Look how things shot straight through. I'm going to go ahead and mark that one, and I'm going to make it red, even though it's a first entry, because there's so many clues there. You trapped a lot of new longs up here, and look how this comes and goes straight through the EMA. No resistance at all, and no resistance here where you should expect, or no support here where you should, no support here or no support here, not resistance. I've got it backwards. And then it pulls back and tests that and then turns straight down. Um, and, I'd be looking for a leg like this over here. We already talked about I'd have measured it a couple of different ways, and you can see that, and we got real close before it corrected. So I think you can go a lot short right there, and that definitely takes you into the 2 o'clock hour. So I didn't mark anything else. And then of course you get down here and you find some support right along this line. It actually got through it, but it ends up holding, and the market heads back to the midline. Exactly what you would expect to happen. So really, really good day. Still a good week. It wasn't as good as some of the weeks we've had in January, but still not a bad week. The key is just being able to figure out what's going on. And if you can't, even on the big picture, if you just use these shorter term trend lines, it really, really helps you. And you gotta, and there's actually another one probably in here that I don't have that's a little bit more midterm, but all you needed was this one right here to catch some of this moving down. And I was done earlier today, be honest, and then came back to do this, tried to get this done before too late since it's a Friday, and that was why I was tempted to come back and trade some more. And but anyway, you've heard me talk about that, and my thoughts on trading late in the day, because if you've already met your target, you come in here, and if you make a mistake or you get fooled or you get trapped, and then suddenly you give them back all your money you made, and what was going to be a great weekend turns out to be a disaster, and you go into the weekend down and out, and you come in with that same, at least you have the weekend to think it over, but you also have the weekend that you got to stew over it, and it may affect you Monday when you come in. So that's that's why I don't like trading in the afternoon. Come in, trade in the mornings if you can. If that's all you can trade, that's fine. And if you're good enough where you can trade all day and it doesn't affect your trading, or then more power to you. But if you're new at this and you're trying to get profitable, I really am not a big fan of trading in the afternoons. Definitely after 2 o'clock. You can trade pretty safely all the way up to 2 o'clock or so, but after that, and the only thing, the closer you get towards even like 1 to 2 o'clock hour, if you make a mistake, you don't have a lot of time to make it back. And a good example was the gentleman that I shared his chart the other day. He had a couple of losers early on. He was down 4 points before he really even got started, but he kept a level head and he came back, and before the day was over, he was profitable. And I was really excited for him. He was excited. And, he finally proved to himself that, hey, you can have a bad start. And if you just keep a level head and keep following the rules, you can come back. And there were a lot of comments yesterday. I'm going to say this and I'll wrap it up. There were several comments on the video yesterday. I talked about sim trading and not trading live. And I will say again, I think I said it yesterday. I'm not going to go back to the video and listen again, but I think I said it. But there is a difference, and I know that another trader alluded to it, that there's a difference between trading live and trading sim as far as how it works against you psychologically, about how your mind works against you. Obviously, if you're not trading real money, you're apt to do things you wouldn't do trading live. I mean, you can probably trade bigger, and you're not worried about losing all your money. And but the idea behind the sim trading is to try to get profitable. Once you get profitable, It may not help you to continue to trade sim, but you need to prove to yourself you can do it on. If you can't do it on the simulator, you can't do it live. So don't even waste your time trying to go live. Uh, if you can do it on the simulator, at least you know you can do it. But this is the part I wanted to really share with you, and I talked about this with that same trader through email again that I brought it up about in the video yesterday. Um, was that even though let me back up a step. What you got to do when you're on sim is you have to trade exactly like you do when you trade live. Now, if you're on sim and you're winning because you make mistakes and you double down and you get lucky and come back, or you're doing things different, you're trading bigger sizes, or if you have a couple losers, then you on two contracts and you double up to four and get it back. If you're just fooling yourself if that's what you're doing. So the point of this whole exercise that I'm trying to say is it is important to use the simulator until you prove you can be profitable. But make sure that while you're using the simulator that you're following the rules and you're trading exactly like you can trade live. If you can only trade one contract live, then you only need to be sim trading with one contract. If you're going to if you can't afford to double down, which you shouldn't be doing anyway, it's a dumb way. I mean, you'll pull yourself out of a lot of holes, but eventually you'll blow an account out like that. Trust me. I know. I've been there. I've done that. So don't waste your time trying to do that because in the end you will pay dearly. You will pay the price. So don't try to do it. I'm just, take it from somebody that's walked down that path. Um, Follow the rules. When you hit your loss total, just like the gentleman posted in the video, he quit for the day. Yeah, yeah, he quit. He was down for the day, but he lived to fight another day, and he'll continue to trade, and he'll get better, and he'll learn from what he did wrong, and so on. So, anyway, I've talked enough today. I'm going to wrap it up. Hope you have a great weekend. We'll be back next week. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.